keep it more interesting. Hi, good morning. This is Lakhi Singh, the property fixer, who is today traveling by tube. I don't need to wear my mask now because I'm actually out and about, out of the tube now. But I did land in Paddington today. So got off at the wrong entrance. So I'm seeing things which I've never seen before, and I thought I knew London back to front. So interesting times. But there's a massive Marks and Spencer's here. I didn't even realize that was here either. But so welcome to Ninder Singh, our special VVIP guest, who's with us today. He's also literally in drive time as well, driving, and he's stuck in traffic, I believe. But
Indeed, I am. Yes, I am.
So we are going to be covering quite a lot of interesting topics because I'm walking with traffic. I'm going to be putting it on mute so we can hear Ninder Singh loud and clear. So it's just, and you're going to probably hear a lot of panting from me trying to get around London, get back to the office. So I think I'm about half an hour walk from here. So I'm just trying a new route in to London today by public transport. It's the first time I'm traveling in by public transport since the lockdown. Been traveling by car to be extra safe. So interesting times. So
well, Lakhi, every time I come to London, it's always by public transport. I don't even try to drive into London from Birmingham. It's always public transport for me.
I think for me it's become a bit second nature, and but I didn't realize how enjoyable it is traveling by public transport actually, because didn't know there's so much works and things going on in the town. As you can see you can hear in the background, it's literally tons and tons of noise. So what I'm going to do is I'm going to start moving into the main topic today, which is what are the top 5 strategies for growing your business in post COVID-19 2021. Hopefully it is post COVID, but so I remain optimistic, let's say, that that's what's going to happen. So Ninder Singh, tell me a little bit more about your week. How's business? And before we get into the main topic.
Yeah, it's been an interesting week because I've been mulling over. There's restrictions on my event side of the business, but this week's been good because this week we published the 5th issue of the Business Influencer. If you recall, that was a business I set up during COVID, and it's going great guns. So that's what most of the week's involved, is promoting and distributing the magazine and doing a few deals internationally. So I've been busy on that, and whilst at the same time mulling over whether my events side of the business is going to see the day of light this year or go for next year. I have penciled in dates for this year, and I'm eagerly watching the data and the politicians.
Right, so you've got a lot of things going on. While you've been talking, I realized that I've landed at my normal parking space at the Hilton Metropole.
Ah, well done you.
Got my bearings correct now. I know which way to go because this is where I normally walk. Just out by about 20 meters from my normal walk, actually, when I used to park at the Hilton Metropole a few weeks ago. But for those of you who don't know, this is a place called Merchant Square. You might see behind me. This is where they filmed, I believe, part of that film with Jason Bourne, Bourne Identity, the one with the square. Have you seen that film?
It's a great film. I do admit I do love most of his movies, particularly around the Bourne stuff. The Bourne is superb.
Exactly. So I think going to move into the main topic in a second, but we've got a lot of shout outs from various people that come in live from different groups, from our Facebook group, from the YouTube groups. So good morning from Mandy, from Barhan, from Hazel Parker, John Smith, So shout out from them, say good morning. So I'm going to try and get my teeth into the top 5 strategies now. Now that I've found my bearings, I can concentrate. What are the top 5 strategies for basically growing your business? Now, when I came up with this topic this morning, I just thought it's quite important that we start thinking more about growth mindset, about what we can do, rather than talk about what we can do rather than what we haven't got. So we have got a lot of opportunity. So I was thinking, we've got, and I thought with Ninder Singh's knowledge, we could pick his brains and help anybody out there with his contacts, knowledge, and technical advice on how to scale up your business. So I was thinking of the topics around business loans. There's lots of grants and business loans out there. I've just had a long conversation about what's available, and I was shocked about what's available at the moment. So that's quite an interesting topic. The second one is around certain companies, a certain type of concept are getting money thrown at them from hedge funds or equity investors. And the third thing is that I've noted is that there's a lot of money, of fluidity of money in the market. Lots of pent-up demand from people that have made a lot of money who want to invest into things. So those are my sort of general points, you would say, of what I think we could be discussing in terms of how you could be using those things to maximize your potential as a business. What would you be your top sort of 4 or 5 points that you think are something new or something that will help businesses to grow in this market that you think, okay, well, considering COVID-19, we've still got a lot of potential by doing these 4 or 5 key things?
Yeah, I think one of them is visibility. Are you still visible? Do people know you're still around? How often are you being visible? And allied to that, how regularly are you in contact with what I call your low-hanging fruit? The people you've dealt with in the past, the people you're still dealing with. It's always easier to work with people who already know you, people who work with you, and continue to work with them rather than a lot of time trying to acquire new clients and new business. First question is, how are you doing currently with your current business and your current clients? I would start there. And I think allied to that would be you should be doing a monthly cash flow forecast, because to your earlier point about finance, because that will then reveal to you if you do need finance now, you'll know when you need it and you can start planning on who to approach to get that finance. Back to your earlier point, really. So what are you doing with your current customers, and what are you planning for the future looking forwards?
There's quite a lot of things to cover there. So let's just go through.
Funky glasses, sorry. Lucky, that's funky glasses you got there.
I missed the last part, sorry.
I said, I love your funky glasses.
Okay. So I was just saying, let's dissect some of those points that you've made. So first one is visibility. So tell us a bit more about how a company could become more visible, how they could go back with that.
Okay, so a couple of things. Cheap, very cheap. In fact, it's so cheap, it's free. Are you on social media? If you are you maintaining your presence on social media? Secondly, if you're not on social media, then get on social media and start connecting with the movers and shakers in your industry. Go out and connect with people through that. Find new people. Communicate with your current people. And that's the cheapest and easiest ways to raise your profile. You'd be amazed how much people will notice you if you're visible. Once you're visible, then credibility follows, and then profitability, obviously. But are you public? Can people see you? Do people know you still operate? Do people know what you do? And do people know what you're looking for?
Okay, so visibility was the first one. Remind me of the second point that you made.
The second point is it's great being visible. Being visible isn't enough by itself. And once you're visible, you need to start building some credibility so that people have seen you visible, know you do something, know what you do, why you do it, and how well you do it. And then you can start to forge those relationships to take it ultimately to one where you can then do business with them.
Right. So give us an example of any companies that you work with or where you've had to do that to get a bit of an idea, a flavor, how
Okay,
people
what credibility is connecting people. Credibility is giving information through social media, through blogs, through thought leadership pieces. Tell people what you've done, build that credibility up, build that expert profile up, build, if it's small videos, blog, anything that shows people that you're not only visible, but actually you are very good at what you do. That might mean giving case studies of people you've worked with. That may mean, as I said, connecting people, offering people help. Give first before you expect to receive. And that will build your credibility up. Get people to endorse you as well. That builds your credibility as well.
Okay, so I think a couple of techniques I can think of are a lot of people have LinkedIn accounts. So if you just did the basics by putting down what you do and what sort of business in some ways that you look to attract, you have to write down what you're doing. That will help you to define other people to actually understand more specifically what you do, so they can contact you on that basis. So what you write about yourself, and LinkedIn is very important. I get at least 2 or 3 people a week contact me saying you should change your profile to say this or that. It would probably be better, but it all depends on what you're trying to do. And if you're so my situation is that, for example, I talk to a lot of high net clients, but a lot of high net clients don't always appreciate if you're out there on social media too much, because they're quite discreet. And because I also deal with a lot of the retail market where people are buying and selling properties, it's a difficult one. So the question often get asked is, which market are you in? Are you targeting top-end executives, or are you targeting the day-to-day punter who wants to buy or sell their property? So to tell me, Ninder, have you had any issues like that about positioning yourself personally and your brand as compared to, well, your brand and your personal positioning? How do you distinguish that?
Yeah, it's interesting question people do ask is, how do you manage your business profile on social media and your personal profile, and should they be one and the same? So my view, and this is my personal view, is it depends what your long-term objective is and what's your long-term plan. So I'll give an example. If you're looking at some point in the future to exit, in other words, to sell your business, then if you are inextricably linked to it, in other words, the business does not have its own separate business profile, then it's very difficult to pass over those assets being the social media assets, over to a third party if it has your name on it. In other words, if I was selling Ninder Johal Holdings or whatever it was called, that's very difficult to pass over, and therefore the price you could probably get for your business would be lower. So it depends on your long term. If you're a solo entrepreneur and you intend to stay as a solo entrepreneur, then you may think it's better that you push your own personal brand, and through your own personal brand, you pick up the business you're looking for. So it really does depend on what your long-term objectives are, which will determine if you have one account, in other words, one account and I do everything, or you want to separate your business from your personal. So in my instance, I have my own profile in LinkedIn, Facebook, Instagram, and so forth. But each of the brands that operate in my business, which is the Signature Awards, has its own social media platform. Then we have the Business Influencer magazine, has its own social media platform. And the third brand, which is Natural, that has its own. Now, I accept some people follow all three or all four. Some people, interestingly, only follow one and not the others. So each brand is building its own profile. If then, in the future, I wanted to sell one of those brands or exit one of those brands, then it's easier to do because it has its own assets. So that's an example. And how do I accept it? Well, the brands, when they put their messaging out on social media, they tend to go Monday to Friday, and then they're largely business related. In my case, mine are business related. I normally push all three brands on mine, but I may talk about things nothing. In fact, I do talk about a lot of things nothing to do with my business. Hope that helps.
Oh, that's very useful, actually. I think a lot of, I suppose, depends really where you are in your business. If you're more of a startup, then you did have a more of a personal profile. It might be a bit different. But if you're more at a mid-tier type business or top-tier type business, then I think identifying the business separately for your own personal profile is quite, is going to be pretty important, especially if you're looking to exit by way of an IPO or looking to sell your business at some stage. It may not be so significant if you're looking to retain the business long term, so it may not actually affect you in that way. But I think I personally think it's always good to maybe keep yourself somewhat separate as an entity from your business, because managing the PR or risk around PR is very important, and having a business that has the longevity without you and not associated with just the person can also work, but can also backfire as well, depending on what type of business you're in and how risky it is. But anyway, I mean, we've got a classic example, haven't we? Do you remember Ratner?
Well, interestingly, I've got him on a forthcoming podcast, and I've been interviewing him for the magazine. And he's so famous, it's now called, Have You Known Ratner? And that was a classic example of someone who said the wrong thing at the wrong time, and it brought his business crumbling right down. And he had no idea that the words he would utter tonight at an Institute of Directors dinner would have such an effect on business.
Exactly. I think it can work well, but if you're likely to make more likely to make some faux pas about your business, which can happen to anyone, really, I suppose. Had a few drinks or something, it's probably got a bit carried away, not really thinking about what you're saying. It can happen. So moving back to top 5 strategies. So we've got visibility, we've got ability to give value to people. Third topic that comes to mind, which is quite a biggie, is raising finance. Did you have any particular comments about raising finance in the market? All I wanted to say was that there's a plethora of grants and loans, R&D grants and tax credits, and lots of things that can do which are in your company that could save you hundreds of thousands of pounds, if not millions, depending on your type of investment. Do you have any particular tips for people out there about raising finance?
Right. So it depends on what you're trying to do and what you need the money for and how long you need the money for. So if it's something short term and you need it just for what we call working capital, which is day-to-day operations, and it's short term, then talk to your bank and just a normal overdraft. The bounce back loans and the CBOL loan are gone, so you can't get them, and they were at a preferential rate. In fact, a really low preferential rate, 2% or something. Now, what's interesting, Lucky, you talk about raising finance. With inflation raging as it is, the likelihood is at some point in the near future, interest rates will go up. And so from a treasury perspective, in other words, if you're raising finances all the time, now might be a good time to negotiate a deal with the bank before those base rates go up. And at some point, although they think inflation will have sort of calmed down by the end of the year, the way things are going with both consumer demand and the shortage of raw commodities, interest rates, there is a possibility they could go up. So if you're looking to raise finance, my recommendation, although I'm not an advisor, I'm not a financial advisor, is start thinking about raising finance now while you can still get the rates that you can. So that's long finance. In terms of equity, I'm always in the belief where people say you can't get hold of money. Well, there's always been a flush of money, always.
Lot of views out there, people get confused between debt and equity, and what the difference is. Can you give us a quick basics?
Yeah. No problem. So debt is where you borrow some money and then you repay the money, and the only additional burden on cost of that money is the interest you pay. So remember, there's cost attached to borrowing money. It's a cost just like when you buy supplies, you're buying finance. And when you buy something, there's a cost attached to it. So in the example of borrowing money, there's the cost of servicing it regularly, and then there's a cost of returning it all, and the interest you paid on top. And of course, there'll be associated costs in terms of administration. So it does cost money to get money. Equity, on the other hand, is someone gives you money, and whilst there's no direct cost attached to it, they do own part of your business. So the consideration involved is, here's some money, I now want a share of your business. And that's what we call equity. So they're buying, so what's costing you is not money, but potential portions of money that you make in the future. So what you make in the future, a fraction of that will go to the person who's giving you the money in return for those shares. So there's a cost attached there, but that cost will be in the future. And the person giving you the money in the form of equity is taking a gamble, and is taking a gamble on you being able to perform and make profit, and they take a percentage of it. And that's the sort of subtle difference between the two.
Perfect. And into your businesses, do you typically take debt, or do you prefer equity, or how do you decide the difference between which one is which?
Okay, so I think what you decide depends on two things. On firstly, where do you hope to be in 5 to 10 years' time, and you work backwards. So if you got huge growth plans, then and it's fast growth plans, then the bank is unlikely to give it, because they may see normally fast growth means risk as well. So unless it's something really good, your fast growth might be best and might be attractive to people who want to take that risk, and that's your equity. If on the other hand, you've got more modest growth projections, but they're predictable, so in other words, you know that you're going to make this many sales, you know it's going to cost you X amount, you can predict that you're going to be able to pay that loan back with interest. So the more predictable your business, generally speaking, the more the banks will like it, and the more the banks will give you them. The more unpredictable, and that normally comes with growth companies, then that tends to be a model that suits equity more rather than loans. But listen, the two are interchangeable. It all depends on your sector, depends on your product, depends on your plans, and above all, depends on the team operating the business as well.
There's quite a lot of information to take in there. I'm just crossing the road. I could die here. Look. It's a red man still running. Scary times. Might get run over. It's quite a dangerous interview, isn't it? But luckily, got my sunglasses on. The sun's not bright enough to distract me.
As usual, it's raining here. Since we first started speaking, I was in Birmingham. I'm now in Wolverhampton. It's been raining throughout the whole journey. So it's something about on a Friday when you and I chat, it's always raining.
Well, it's sort of drizzling over here at the moment as well. So that's sort of quite a nice drizzle, because as you're walking, it sort of cools you down a tiny bit. So it's not too bad. So going back to this debt equity issue, So debt funding, I think, key point that's come out is that if you are looking to grow your business, do try and get maybe fixed terms, so you're not going to be playing over the odds when interest rates do go up, if and when. And I think the other point is that you've made is around equity. You've got to deliver. You are taking money from somebody, and you can get them the growth. Now, what comes up, another point for me is that if you're a particular industry sector, well, that's the flavor for a lot of hedge funds because they like that space. So the whole social media space is massive at the moment. So you can actually get 7 times or 20 times the valuation of your company, depending on how strong your concept is. It could even be 100 times the value of the company. So you've got a company called Triller, for example. I think they're due to go out to market by September this year, I think. So if you bought shares in them, they're equivalent of TikTok in America, competitor, but they've managed to get the similar sort of endorsements, similar sort of client base of people that are already publicizing TikTok as key sort of ambassadors for TikTok. They managed to pull quite a lot of them onto their platform. So a friend of mine has actually invested some funds into that, and I think they're expecting about 7 or 8 times the return amount of money they put in. So if you're putting 100,000 in, you're looking at 800,000-900,000, which is not bad at all as a return. So what's your recommendations, Ninder, about investing into the fintech space or the prop tech space or clean tech or agri tech? There's a lot of potential if you're raising money to get money, the right concept, and if you're positioned in the right market and you're known in that market, or you're a pioneer in that market because you've got experience already, then you can do even better. What's your thoughts on that market space?
Well, look. My guess is most people who are listening in here probably run small businesses. They don't run large businesses. So my guess there is it's keep it simple, stick to what you know best, try and perform the best you can in what you know best, become the best in what you do so people know you're the best in that, and then raising finance becomes much easier because of your reputation. As for all the stock markets you referred to, let's not forget, I know it's been up and down, the crypto market. I will always say with everybody, have a diversified portfolio. So I have a small a property business. I have some money in cash. I have some money in the stocks. I have some money in pensions, and I also have money in my own business. So it's spread right across. And what it means, if there's a disruption in one of those areas, hopefully the other areas will benefit. So always think of a wide portfolio, have a diversified portfolio if you can, and make sure that you spread the risk. Don't put all your eggs in one basket. And those people that did discovered how much problem that becomes during a crisis such as COVID. So yeah, if you want to put money in the stock market, it's fine. Just make sure you have a diversified portfolio fund, even in the stock market, so you're not dependent on one sector.
Okay, some very good points for a lot of our viewers out there. But I'm sure there may be a few sort of budding entrepreneurs who've got looking to do equity raises and take their company to a different level. So a lot of potential in that sector as well. But I'm going to say that you just need to be very knowledgeable about your sector. And if you want to get,
I think look, it's all about networking as well, because the more people you know, the more people turn you and point you to other funders. The more you network, the more chance you're going to come in touch with people who lend money, particularly if you're a startup or a fast tech startup. Networking is really, really key in both enhancing your brand, but you connecting. Because at some point, I always say to people, network with people you want to work with in 5 years' time. So start networking now. And if you're a fast tech startup, you're going to need finances in the future. Are you networking with people that might be useful to you from finance in 5 years' time? So it's all about networking. Make sure people know who you are. Make sure you're visible. And that's part of the trick. It's not who you know. It's probably who knows you.
We've got quite a few viewers making comments, and I've got Carolyn Williams who's saying good morning, and she's saying interesting breakdown and explanation by Ninder, and she's saying it's also agreeing with you, Ninder, which is all about your network, is your net worth, connecting with people. And Carolyn is actually a notorious networker. She's very good at setting up Zoom meetings and getting people connected even during COVID-19. So, and she said, I go along with Ninder, diversity in your investment portfolio is the way to go. It's the way to go. So what you may have noticed, viewers, is that I've been walking for half an hour. That's probably...
Oh, well done. Well done.
So I've been walking for half an hour, but funny thing is I didn't take any wrong directions. I'm just probably enjoying walking with all the sights of London to see, and showing all the views, all the different famous roads as well, so Sussex Gardens and Merchant Square, etc., etc. So that's typically it probably take me 25 minutes to get back to from the office to the office. But today it's going to be a slightly longer walk for obvious reasons, because I'm holding the camera and concentrating where I'm going. It's not really that easy to do, but there we go. So Ninder, so networking is a critical thing. That's what in your line of business, which is events and also the business influencer magazine. May I ask which are the 2 or 3 key things which actually help you to get established where you are? Do you think you could have done it without your network, or is it because you've been in the industry such a long time, people know you? What are the 2 or 3 things that has been the secret to your success?
I'll start with the word you started with right at the outset, which talked about mindset. I think you've got to start. The rest will then follow. But if you haven't got that mindset to overcome barriers, to overcome obstacles, and to overcome challenges, I don't care how good your network is. If you haven't got a mindset to push ahead and forge through, then once that's in place, the rest follows. Because what they say is, if you're confident, people who are confident are going to come to you. So you tend to attract the kind of people that you are. And if you're positive mindset, positive thinker, then you're going to attract those kind of people, and then the network will start to build. But it's obvious that you have a negative, you're a negative person, negative disposition. You always think small. You don't seek out help. You don't seek out people who are better than you. Then I'm afraid that's where you'll remain. And if you surround yourself with people that are negative, small-minded, that's where you'll stay. So it starts with a mindset first. The rest will follow. And then, of course, it's hard work. Nothing comes easy in life. Some people are fortunate. They come up on an idea that's scalable and they scale it, and good luck to them. But generally speaking, for most of us, it's bloody hard work. So mindset first, hard work is second, and then I think your network comes into place once you got those 2 first in place. Because people will know if you will work hard or not. So those are my sort of 3 tips.
Right, so just to repeat them again, I think there's a bit noisy in the background. So one of them is to just keep a positive mindset.
Well, yeah. So the first one is definitely mindset. Make sure you've got that positive mindset, and then of course your network is also very, very important. And like I said, once you've built that positive outlook, that positive mindset, you tend to attract those kind of people. So your network also becomes very important.
Wow. Okay. So networking and then talking to the right people, then basically growth happens once you people then start. I suppose you're a bit like a magnet. Once you start talking to the right people, sort of hanging out with the right people, and have got understanding of your products and services at that level that you need, you're probably going to be able to do pretty much whatever you need to get done. So I suppose that's how it works. Is that right?
Yeah, and I think also, once all those things come to place, I mean, those are the intangibles, the things that you can do. And remember, working hard, that was sort of my second one. You got a positive mindset, work hard, then network. And then, of course, you've got to do the other stuff, which is certainly plan, make sure your time management is good, make sure you plan and deliver things you promise. And it's real, honestly, like it's real basic stuff that you get right first. If you get the basic stuff right, business is not complicated. Honestly, it's not.
So on a different note now, I think that's some very interesting points there from Ninder Singh. You won't believe this, but somehow I've ended up in completely wrong place. I've actually landed up in the South African, not even South Africa actually, where it is in the desert. I'm in the deserts now, and this is more like the safari time here, because if you look behind me, you see something very interesting. I don't think you can see all that. A bit like Jurassic Park, but with elephants. You see that? I think one's just coming
Yep,
towards
I
me.
do.
You keep walking towards me.
Very interesting.
Okay, well, we've got an exhibition on in Berkeley Square, so I knew that nobody would get fooled with that joke. So we've got literally elephants everywhere in the whole square, on that side as well. So never a dull moment in Mayfair, I'd say. So what I'm doing is I'm going to continue the interview while I grab a seat in the centre. Hopefully the bench here without any pigeon droppings. 1 second. Here we go. And you can have an elephant in the back as well. It's a bit like one of those BBC interviews where they go somewhere and then interview and start talking. I've got a bin as well. Maybe that's probably not quite that nice. There's an elephant in that. How's that for a view, Ninder Singh?
Nice.
Nice, yeah? Okay. So we've covered finance, debt, equity. We've covered networking. We've covered visibility, putting your name out there and connecting with people. That seems like about 5 strategies. So we've pretty much covered most topics, I think, in terms of what people should be thinking about when they're trying to scale up their business. Is there any other points that come to mind?
Yeah, and my last one before I too disappear to my next meeting is get your numbers right. Plan your numbers. If you don't plan your numbers, you don't know where you're going, then how are you going to raise finances and how are you going to know what you're going? So get your vision right, get your plan right, get the numbers right. The numbers will tell you what you need, who to get it from, when to get it, how long you need it for. So once you've done the 3 basics entrepreneurial traits, then planning, and make sure you've got a plan ready. Sorry, have I lost you?
It's me. I forgot to take it. When you talk numbers, give us a slightly better brief about what the numbers are. I think I'll give the headlines, which I think would be that you need, if you're trying to raise, I'd say these are my opinion, these are the 2 or 3 key ingredients. If you've got a business that's already beginning to make money, a lot of investors like to invest into businesses that they've got proof of concept.
Yeah.
But if you haven't got a proof of concept, but you've got a lot of strong evidence that if you got X amount of money and that you'll be able to hit X amount of target based upon your logic and somebody understanding that industry sector, they love it, then you're not going to have a problem getting money. So would you agree with that very general basic points about raising money?
100%.
So the second thing is that a lot of companies, they get their first round, which is startup capital, but they haven't got into generating profit, but then they're moving into raising more money. So that could be a bit sticky, I suppose, isn't it? Because if you haven't started making money and you've already raised your first round and you hit your targets, then the shareholders are going to get not going to be very happy with that. So what I suggest we do is that anybody that's in that situation, you're going to have to revisit your valuations and maybe not value your company so high, because you're not going to make yourself look too good in front of investors. So this space, or getting money, equity space, is a very sort of closed shop, I think, because not many people understand how it all works. What advice would you give, Ninder, to people that are trying to get into this space and know more? Or is it just come down to pure networking and then establishing your contact base?
Couple of things. Firstly, yeah, networking is important, but it's a complicated space. So that my first advice would be surround yourself with good professional advisors who can help you decide how to price and how to cost. It's what finance is going to be. So once you're in that space, you've normally got a good firm of accountants and lawyers that will go through. I think this isn't really the platform to deal with that kind of complication.
Having a good accountant, a good law firm, or somebody who understands the business sector, I suppose they're critical, are they?
Yeah. And I would have thought if you're in that space, you probably would have got some good professional advisors and people like that on board. So. I'm now going to disappear because I can tell I'm going into some really areas where I don't think the broadband's going to be great and the Wi-Fi is not going to be great.
Sorry, I just managed to pop off there by pressing the wrong button. It's the elephants actually that grabbed my phone and picked it up.
Well, Lakhi, I'm
okay. Can you hear me? You're at your next meeting. So I'll round up anyway because I've got lots of points to give. But we appreciate you coming on the show. It's a slightly bad line, but thank you very much, Ninder Singh. Hope you had a safe trip. Sounds very exciting, going from Birmingham to Wolverhampton. Wolverhampton?
And you too.
Okay, we'll have a great meeting, and
yes,
thank you again for coming on the show. I'll do a quick round up now for the next 10-15 minutes of all the key points we discussed, and discuss a couple of other ideas with the viewers and get their take. Thank you again, Ninder, and we'll catch up the next few weeks with the next show. Okay, so I think Ninder Singh's got a bad reception. So I think he's saying, thank you very much for having me on the show. So he's back again. Yeah. Yeah, so I think it's cutting out. So he's saying, thank you very. It's probably in a bad reception area, because the 5G isn't really that strong in out of Birmingham. So hopefully, I think he's saying, have a good day to all our viewers, and we'll catch up soon. But he's gone off the screen now. So, okay. So, what are the top 4 or 5 strategies? We picked up a lot of things around visibility, social media, networking, debt and equity, getting your numbers right. those are the 4 or 5 key things. I also wanted to cover a few other things with you. By the way, I think Carolyn has also made some interesting topics. She's saying that she's opposed to office ceilings and blank walls. So I think she loves the elephants by the looks of things. But let me give you a slightly better view of the elephants behind me. There they are. Let's get up a bit closer so you can see them. Hopefully nobody will take my bag. I left it at the bench. So they're made out of looks like bamboo, actually. Wow. So what does it say? It says that elephant is dedicated to Johan, Ben, and the legendary team at IBI International Logistics who have made this exhibition possible. To home an elephant, go to its email site if you want to. I'm not sure whether you can buy them or not or something. So it is, yeah. Yeah, I just forgot it there. Okay. Somebody's reminding me I forgot my bag here. I better come back because there's my valuables in here. So back to the key points. So Carolyn is actually really happy that she's managed to see the elephants close up. But a bystander actually did say you shouldn't leave your bag around because it might get stolen. That's true actually. So I've come back to just protect my bag because this is central London and there are lots of things that happen here which are out of the ordinary. So Sonia Lambert's made a very funny joke. She's saying you have several elephants in the room. That's a good one. I like that. So I think Sonia is on form. Right. So why is it that we chose the topic of growing your business today? And why do I think it's important? Being the property business solutions fixer, I don't really like to be fixing things. I rather that anybody out there that's trying to get into property or business, they get all the fundamentals right. So we don't have to go and fix things because they're already on the ball. So the idea is to really support, inform, train, give knowledge where we can with the Fixer platform and the Alternative Business Solutions community. We are actually going to be expanding the community and growing it and reinvigorating it. We're hiring a few more staff now who are going to be coming in on a bit more of a serious note into the Facebook group community and supporting all the activities to take the group forward and actually growing it. So anybody out there who wants to be part of the team in the UK with me, do feel welcome to contact me directly. Carolyn Williams is saying Sonia Lambert comes up with some clever punchlines, which is true. So Sonia, I think she's definitely on the money, on the ball. She's on fire. Fantastic. Well done, Sonia. Okay, so got another 10 minutes to cover. And any questions about business or property, please welcome to put them below. And I'm happy to sort of answer anything that anybody's got. Carolyn Williams sent us a fire sign. She's saying we're on fire. Okay, so another few points I had about growing your business or your property portfolio. Number one, really fundamental point that's come out is that Ninder Singh is actually the most conservative I've heard him actually, funny enough. He actually said that it's likely interest rates could go up because inflation's getting higher. So he's concerned that if you're not really focusing on speaking to the bank and actually locking down the interest rates on a fixed rate, that you could have a problem if rates go up, either for your business or for your property portfolio. I think that was quite an interesting point that came out of the conversation. The other interesting thing that's come up is that I met for dinner with a gentleman yesterday, just randomly, a friend of mine, and he's got access to the provision of raising funds up to about 10 million through a government loan, and he's able to actually help you to achieve that. But you need to have at least a £200,000 turnover for the last 2 years and all proper accounts. So it's important that we're all very much in sync about understanding what the potential of actually getting money is. And I think they can give you up to about 250,000, from 250,000 up to 10 million. But obviously, your numbers in your business and your forecasts for your business in terms of what you can achieve have to be very strong. So if you've got a very strong management team, very strong credentials in the last 2 years with your accounts, and you've also can start showing the cash flow straight away in terms of what your projections are, you might find that you can get some very good funding potential for your business. So if anybody's got any questions about has got a 200,000 turnover business and wants to raise 250,000 upwards up to 10 million, happy to sort of look at it and give an assessment of whether it's possible or not. So do get in touch if you know anybody who's got a 200,000 plus turnover, because you may be doing them a big favor. They may not realize that they've got access to so much funds. That was one thing that came to mind when we came up with this topic. The second thing is really scalability. We've got a lot more comments actually before I move on to the topic of scalability. So Sonia is saying, to grow your self business, you also have to grow yourself, exercise, learn, connect, and collaborate. So that's exercise, learn, connect, and collaborate. Good ones. She's meant grow yourself and grow your business. Carolyn saying the morning live is right there on the park with a ready-made team. Wishing you a wonderful Friday. Please join on the High Five Meetup Tuesday, July 6th at 7 p.m. Okay, there we go. I think I have to try and attempt at least attend the next one. I usually end up doing a lot of meditation classes these days from between 6 and 8 on Mondays, Tuesdays, and Thursdays for a couple of hours because I've taken that up. So, but I will do my best, Carolyn, to join you. Thank you very much for sharing that with the audience. So anybody that can make Tuesday, July the 6th at 7 p.m., Carolyn will be hosting, and tell us more about what you've been doing, Carolyn, in terms of what's going to happen. So put something in the group, but I'll put it out for you on here on the group as well. There we go. See that? Right, we've got another 5 more minutes to go. VJ Sal, who likes to talk a lot and actually give lots of detailed explanation of everything, is not on the line today. Normally he fills up all the space. I like to talk to somebody and they can talk. We'll ask them questions. I actually prefer that, but that's fine. I've got a lot of knowledge and information to share. So what else is it that's important? So the other topic I was going to cover was scaling. So how do you scale your business in the property or on a new business. So scaling is quite exciting actually, because if you can get a company to just got a concept, there's certain companies that I know that have got a concept that raised 120 million. A friend of mine just raised 120 million. Another company tried to copy that idea, and just on his experience in the industry managed to raise 10 million. So one major factor in terms of getting funds into your company is your name, your credibility, your experience in the industry, and your network in the industry, and how well you're respected. So if you've got all of those, you could do really, really, really well. So that's point one. Point two is that if you're onto a concept that's and you're an industry specialist in it, and you've got past experience in terms of making money in that sector, then the chances of you getting funds or equity for your business is going to be very high. So having expertise in a particular area like prop tech or the luxury, let's say textiles, or it's a new concept around textiles, you could do really well. So those are my sort of key tips around property business. And well, I haven't gone into property actually. So how can you actually make 10 times more money in property rather than just doing property as a normal buy, refurbish, rent out? So there's quite a few sexy techniques that have come out in the last 4 or 5 years, 10 years: rent to rent, service accommodation, HMOs, which are quite high cash flowing type businesses. So those are quite interesting. There's quite a lot of play in that. But social housing seems to be now the big thing. And also, not just social housing, but the prop tech industry is also going through the roof. A lot of people are coming up with clever ways of reducing the cost of taking a property to market, or management costs, or letting costs of managing a property. So there's a huge amount of knowledge and experience now in that market that people are now using to scale up. So there's little kids here now actually come to say hi to their mummies, to say hi to the elephants. That's nice, isn't it? So the little boy's got, is it a zebra? A zebra on his jumper. He's got a zebra on his jumper, and he's come to see the elephants. But I think elephants are really being enjoyed. That's the most important thing. Okay, so I've got 1 minute 30 seconds to go. So what else would anybody else like to see anything else in Berkeley Square? Or we've got another 1 minute to kill. Maybe I should show you some more elephants, but this time I'll take my bag with me, so I don't get people, bystanders, saying, "Oh, make sure your bag doesn't get stolen," which is very kind in some ways. Okay, let's have a look at, I think some of these elephants have got different names actually. So this one's got a Punjabi name, it's called Tata, dedicated to Maggie Draycott. This one is called Tata. And let's have a look at this last one. Can't say don't get any entertainment. This one is called Sultan Bateri. Yeah, that needs to be. I'm looking to connect with owners of commercial premises to help them save money on their energy and go to green. This is Sonia Lambert saying. So Sonia, yep, if you need any help with that, let us know. This elephant is called a Whisper. It looks like one of the biggest ones, actually. Very prominent looking. See the placards here as well. See the placards. So there we have it. 1 hour of fun time viewing with Lakhi Singh, the property fixer. Being shown around London, interviewing Ninder Singh. Literally, basically being the fly on the wall. Lakhi Singh's walking journey today. Catching the tube for the very first time. Coming into London. Actually, the car's gone in for repair. So had to really come in by train. Didn't really have a choice. So hope you all have a great Friday, great weekend. And I was going to try and sing that song now, Friday, but I can't remember the tune. That's quite a cool song that comes on TikTok with the guy sort of jumps out of the car and starts dancing. So I'll have to do that for my TikTok very soon. So guys, we'll catch up very soon. Have a great weekend. Bye for now.